Alright, good morning. I'm 20 seconds early, but I don't care. Nobody watches this anyway. This is now a journal for myself, a way to motivate myself and get used to presenting. I would use that word. Anyway, welcome. Premarket Wake Up. It's the name of this show. My name's Frank. My community is called No More Paper Trading. It will one day grow organically into a community that traders can come to share their opinions and to help others. And there will be no fees for anything whatsoever. Alright, I'm going to try to make this quick. I know I say that every day, but I'm so far behind. I've been lazy. I let other responsibilities in life keep me from reaching my targets with how much time I want to spend on trading. I know it's often a perfectly good excuse, but not good enough for me. If I have to work on a day, then I should spend the night trading. But it's very common for humans to falter. You wake up so motivated in the morning, and then it's really hard to work another 4 hours after you've worked 10. But if I don't, I won't escape poverty. All right. Right now, I am upset with the markets. I hate it. I don't want to trade. So there should be a time when I catch up on other things, on records and strategies I plan to work on. But let me tell you why I don't like the markets right now. One tweet is all it took. I mean, I know there was other fundamental reasons, but that one tweet turned everything so volatile that I fear trading anything. You kind of see some patterns emerge here, but price can move so quickly in one direction, more than it usually does, that I don't like it. I don't want to trade right now in futures, or I'm sure the SPY's the same way. So what you see in this is the M and Q, but I think you would see the same pattern in the ES. Several half-hearted attempts to get us back up to the top, but they all fail pretty badly. But yet we're not going lower. This is not normal. If we go back in time, this is a pullback. This is a mess. Everything, I guess, is just so fragile. I mean, even last night when we pulled back, there we go, a button didn't work. When we pulled back to, I guess you can say we stopped at that level. I was looking at the pivot point. But price is so choosy about what key areas it's going to choose to stop at. And it didn't even really hit the pivot point. It came close. But what I'm trying to say is I don't feel comfortable trading right now until I should be practicing on markets like this. But when I look at price action, I don't see a clear winner. Or you'll see price favoring bullish or bearish behavior, and then all of a sudden, out of nowhere, it'll break the other way with an extreme amount of energy that you just lost everything you gained in one sweep. And I know that can happen other times in the market, but it just seems so much more pronounced lately. Anyway, what happened last night? Well, we went quite a bit lower to Tuesday's low, which is also the pivot point, and then rebounded. I would assume that we're doing so on less and less strength. That is what it appears to me, even though we have higher highs Tuesday, Wednesday, Thursday. RSI just shows decreasing strength, as well as the balance of sellers, as well as MACD. So I would say we are heading into a bear market. I don't know how long it will last. Something's telling me that by December we'll be out of it. Maybe around the second rate cut, if they do it. But we'll see. That's not my concern right now. Price right now is heading into yesterday's close. If we get beyond that, we have last month's close. Oops, I'm looking at MNQ. I meant to be looking at ES. Sorry. Let's start there at ES. So last night on the ES, yes, it did stop quite arbitrarily. I don't know what the proper use is. It was random. You would have had to watch the NQ to know that price was likely to stop there. But the ES in the overnight broke right through the 50 moving average, which has kind of worked as a support area the past week since last Friday. I don't think it will hold. But as ES bites right now at yesterday's close, we'll see what will happen. Going in to the trading day, which I can't trade today. I have work to do. I would say sell weakness. Anytime price gets to a major key area, watch price action, and you'll see it either in the orders coming in or an RSI. You'll see the weakness. I don't know. I'll check the news then. Earnings has not been good. It's been mixed, I guess I would say. Not enough to support the markets, but just looking at technicals, things are weakening. I don't see us getting beyond this mess right here. It's a lot of resistance built up in there. I also don't like how the days have insane ranges. How do you discern a pattern from this? Maybe someone did, but I cannot. All right, NQ. I already went over NQ thinking it was ES. But also 50 moving average acting as a area of support. But like I said, I think we will break it at some point, which is fine. The markets need a pullback. If you're brand new to this, or if you're Gen Z, bear markets are good for the economy. The fact that companies fail is good. The fact that we have monopolies ruling the market, that is bad. We need new companies coming in, fresh blood, to innovate, to make money, healthy money, not just debt, not just sending money back and forth between companies. Anyway, I'm going back and forth between the 5-minute and the daily. If you cannot see the symbol. I'd say look out into the open, look out for last month's close. We've kind of been forming a shelf there, even though price does range beyond it. I guess you would call that the mean. The upper end of the mean, of the average. We hang there quite a lot this week. So that would be a great place to scalp, back and forth between there. But just look out for huge spikes in volume and volatility. I'm used to scalping without automatic stops. TradingView is not great with their order entry. I gotta find something else. Another one of the million things on my to-do list. It's very hard to trade quickly with a stop. I figured it out. There is no way to do it the way I want to do it. I want to press a button and have it place an order right where my mouse is. Now you can do that on TradingView, but you cannot do that and then have an automatic stop set up as well. So if you do that, I don't want to do it on, let me do it on a paper account. Let's try. It'll let you drag, but I don't have the time when price is moving very quickly, come over here and drag. And if I set up a predetermined order, such as I tried yesterday, it doesn't work. Instead, it just does a market order to those specifications. That's unacceptable. Maybe it's because my broker does not work right with them. I don't know. I can do it on Interactive Brokers Trader Workstation. At least I think I can. I don't know. That software is a mess. But that's all we have to work with. So I have to figure out a way to set up a quick scalp with stops set up. Anyway, while we're here, the Russell, after making new highs Wednesday, based on, I believe Powell hinted that he definitely will do a rate cut in October and December, so that shot up the Russell. But again, I should have checked in what happened in the news yesterday, but just telling from the chart, something bad happened. And right now we are I don't know. But look at this, look at these ranges. We go from 40-point ranges to 80-point ranges. We'll say 30. We'll say 25, 30-point ranges to 60 to 75-point ranges. And as a trader, you want to catch them. But if price isn't respecting fundamentals, how are you going to catch them? I don't know. I guess that's my next step in trading, is figuring out how to take advantage of volatility or stay out of the way. Price right now is stuck at yesterday's close. I would say with the way price has been acting, look for a try at yesterday's high. But I don't think it will make it. I think it'll fail somewhere along the way. But again, I don't see any real trends in markets right now. Everything's a mess. Let's just move right on to the Dow. Very similar structure to the Russell. 50 SMA not really acting as resistance. The only real resistance I see anywhere is S1 pivot point, which even last night I guess you could call that respect. That would have been a good trade, maybe. Especially, yeah. Look at the RSI. Even with markets the way they are right now, I would have taken advantage of that. The first time it hit, you see a huge drop in strength. Second time it hit, strength is rising That's good for at least a decent pop. But I'm asleep at 4 a.m. Going into today, I have no freaking clue. It does look like we are going to stay below last month's close at 46,689. Until I see some type of patterns forming here, I don't want to make any longer term predictions. I think that's the rule for the rest of the month. Stay away from long-term trades. Only scalp. Really good opportunities. Let's check out gold. Gold has been insane lately. I keep saying it again and again, I won't touch it because who knows when it'll stop. And it doesn't stop. It just keeps going up and up and up. Overnight 5-minute. No real reason to stop up here except for being close to a pivot point. I'm not the best at looking at price once it enters an area it hasn't been before. Maybe the second time it came up to hit, that would have been yeah, I don't think I would have seen that. Strength was kind of looking like it would break through. This time, no. So it hit once at 615, came back at 750. Clear signal right there in RSI that it was not going to break through that point. Actually pretty nice solid movements in gold. Had I been watching, I could have caught it, but I was not. I need help with that. Can anyone help me with shoulda, coulda, woulda? There's a million of them a day in trading. We're back. We came back again and bounced again. That would have been a decent trade. But I could see quite a bit of volatility coming into today. Going into the open, I would look out for the overnight high. I don't know if I would short that, but if we break through, I kind of have a simple rule: don't short the highs in a bull market. Maybe for a quick scalp, but no, even that, it might rip right through. Or if price comes back to yesterday's close, might be a good place for a going long. Otherwise, we're looking at yesterday's low, but as you can see on the daily, most days do not get anywhere near previous day's low. Last time that happened was on the 9th, over a week ago. The slant of gold is just getting more and more straight up and down. Look at this bowl shape here. We're going to be straight up and down soon. I think once you see gold really recover, that might be when the equities markets will be ready to start trending again. That's just speculation at this point. There's too many factors in the gold market to actually make that prediction. Boop. All right, oil. Making new lows with oil. Again, I think that might be because of the government shutdown. I don't even know if the government's still shut down. To be honest, I got sick of looking at news. I got sick of paying attention to it. I felt like I had to since last Friday. Because of some longer term trades I entered, but I don't want to look at it. I really don't. If you just 100% look at the charts, can you see? I don't know, could you have seen this coming on Friday? Last Friday? Could you have seen that just by looking at technical indicators? I mean, the narrative did change a bit. And by narrative, I mean price action, not the actual narrative. But we've been getting bear signals on RSI since May. I don't know. I really don't want to build a strategy based on what Donald Trump says. I'd rather not. I'd really rather not. But I'm sure someone has a tool they made that gathers all of his actions throughout a day, uses AI to analyze what he's saying in his posts or whatever, and then another AI to measure the volatility in the markets if it upticks enough to signal a trade. I'm sure someone's doing that. I don't think I could stomach it. I guess I could. All right. I think I'm done. I don't really want to look at news. Ah, hell, let's do it anyway. Oh, government's still shut down. I'm very surprised that Powell did not say, because I don't have data, I can't make a determination. Remember a year ago or even earlier this year, everything was data dependent. It's all about the data. It's all about what the numbers say. It's very important. It's not important anymore. Anyway, today we have some Fed speeches. Industrial production. I don't even know who releases that. Federal Reserve. And then a couple Fed speeches later. Look out for that. Yeah, who knows next week? Let's take a look at the FedWatch tool. Wow, we're at a 99% chance now, with a chance of 0.5 point growing. I'm guessing the downturn in the markets is the reason for that. Let's see going into next year. So 350 to 375 for December. January's sitting at, it's rising a little bit, chance of another cut in January. The government's not capable of planning that far ahead in any way whatsoever. Alright, so we're seeing at least one cut for January or March. Take one quick look at the headlines, then I'm out of here. Great. So he wants the markets to go up again. I'm sick of government intervention in markets. Isn't that capital or communism? I think we need a real conservative president. Regional banks are up. 5 things to know before the stock market opens. Well, I know one thing. I am out of here. Alright, that's all I have for today. Good luck. Goodbye. I'll be back on Monday. Hopefully with a better attitude.